Hey there, I'm Kimberly Ferguson, CEO and founder of Emerald Expectations Accounting. I'm so happy that you're here. The Emerald Corner is a place where life and business meet. So we want to share with you the process of running a business while maintaining a life with your loved ones. On today's video, in honor of Tax Day coming up on Tuesday, we're going to be talking about the top 10 tax deductions that I see small business owners miss. You filed your taxes, right? Now, keep in mind, these are not in any particular order. So number one is not like the number one most missed tax deduction and so on. And as always, keep in mind that this is not tax advice. So please make sure that you consult a tax advisor to make sure that you qualify for these deductions. And if you're not sure and you don't have a tax advisor, feel free to reach out. I'd be happy to help. All right, number one is car and truck expenses. Now, this might seem like an obvious one, but the problem is that most people don't know how to do it, right? So in order to take your deductions for your vehicle, you either have to have the vehicle in your business's name or you have to track your mileage. Now, there's two options with the mileage, but either one requires you to track them, right? So you can either take your mileage deduction, which is going to be good for somebody who drives something like a Honda Civic. Something that size is going to want to take the mileage deduction, or maybe a newer car. A newer car might work as well. But if your car is bigger than a Honda Civic and you have an older car, you might want to take actual expenses. Now, actual expenses still requires you to track your mileage. This is a difficult one, but unfortunately, that's the way it is, because since the vehicle is not in your business's name, you have to deduct a portion of those expenses, right? And that portion is based off of your mileage driven. So how much of your mileage is business mileage, right? So the most difficult thing for people is tracking their mileage, but we have so much technology nowadays that it shouldn't be as difficult as, it could have been in the past. But you could use an app. My favorite one is Everlance. Basically, it's going to track your mileage for you, and all you have to do is, swipe one way for personal, swipe the other way for business. And that's it. I mean, in reality, you don't really even need to track the personal ones. It just gets it kind of off your list, so you don't have to worry about it. But as long as you're tracking your business mileage and then all of your mileage, then you can make that work. So number two is depreciation. So the most difficult part of this is not figuring out that you have assets to depreciate, right? Because if you purchase a large item, it's going to have to go under depreciation rather than your expenses. But the hard part is if you just started a business and you have personal assets that you're now using as business assets, we can account for those as well. So, you'll have to figure out when you put them in the business, how much they were worth at the time, and so on. But there's a few additional steps, but it's still a deduction that your business is entitled to. So number three is professional services. I know, so shameless plug, I guess. But you're able to deduct costs associated with hiring professionals to assist you, such as, legal assistance, such as accounting assistance, tax return preparation, that kind of stuff. And then, of course, obviously, people who work for your business who are maybe contractors, you can deduct those as well, website design, etc. Number four is office supplies. So this one is less confusing if you have an office, more confusing if you are somebody who maybe travels. Sometimes people who travel a lot miss the office deduction expense because they're like, I don't have an office, right? So maybe I don't qualify for that, but not necessarily the case. You might still need paper, you might still need pencils, you might still need, postage or, small equipment to keep track of your income and expenses, that kind of stuff. That still counts as a deduction for you, even if you travel. Number five is a home office. So a lot of accounts have kind of scared people out of taking this deduction. There's a lot of reasons for that. But one of them is depreciating your home. So if you depreciate your home as part of your home office, then you have to recapture that depreciation in future years. So basically what that means is that the depreciation that you're taking now is going to come back onto your tax return at some point, but it's kind of like a retirement account where you're basically taking a deduction now and then paying the income tax later. So that's pretty much what it is. Nothing, too scary about that. Otherwise, there is a simplified method that you can take, which allows you to take $5 for every square foot of your office at home, right? So if you have a 300 square foot home office, then you can take $1,500 in home office deduction. And there's no depreciating of the house, right? So that's great. The other thing is if you are in a rental property, you can still account for home office as well. But the bonus is you don't have to depreciate your home, right? Because you don't own it. So you just take the actual expenses and figure out how much of those apply to your business and you can deduct it there, right? So That's pretty awesome. The main thing with the home office is it does have to be exclusive use, right? So whatever area you use exclusively for your business. It doesn't necessarily have to be a whole room. So if you have a room and you share it with your spouse, that's fine as long as you can say, 50% of this room is my home office, right? Then you can take the deductions related to that space. So number 6 is taxes and licenses. This one is commonly missed one because you think, I have to have a business license to operate. So, or I have to pay certain taxes like personal property taxes, etc., whatever that looks like. But those are also commonly missed things. I think it's just kind of a mentality thing. Like I'm thinking, well, I have to do this, so it's not a business deduction. But whatever the reason is, taxes and licenses for your business are deductible. The next one is continuing education. This one can be a little bit tricky because, of the requirements for different licensure and stuff like that. But in a lot of cases, continuing education is deductible. So if you go somewhere to, better your education or knowledge on your subject matter, then that could be deductible on your taxes. Number 8 is health insurance and really other kinds of insurance too, but those ones are less commonly missed. So if you're a business owner, you might have, directors and officers insurance as a corporation. You might have an errors and omission as a service. You might have, workers' comp as a service as well. And, any other kind of insurance that you have. But health insurance is the one that's primarily missed. A lot of the times that's because it's not directly deductible, like on the business return. Most of the time it's deductible on the individual tax return. And so that's something that you have to, kind of do in addition. And that is, of course, one of the benefits of having a tax professional prepare your return is that they know that that goes on your personal return, whereas a lot of times that's something that you might miss if you're preparing your individual return. Even if you have an S Corp or a partnership, that still might be deductible for you outside of the business. So the next one is storage. So storage, obviously, this applies a lot to like contractors or people who provide services on site. They need somewhere to store their equipment or their supplies or whatever that is not like an office space per se. So if that's you, then that is deductible. The other case is if you have storage like in your home, then we can kind of account for that in a home office deduction as well. So it's not just lost if you're using your entire basement to store all of your equipment. That might be something that we could implement into your home office deduction, right? And then number 10 is labor. So this one might seem obvious, but there is kind of an issue sometimes with people being paid under the table. If you're paying people under the table, then obviously you're not going to be able to deduct that labor. If you are paying them as a contractor, then you can obviously deduct the labor. And then, of course, if you're paying them as an employee on a W-2, then, of course, you can deduct that, as well as the matching taxes that you have to pay. So that goes back to taxes and licenses, right? But labor is one that is sometimes missed, but more when, someone's trying to be a little sneaky on their tax return. But labor is a deductible expense for you. So don't try to be sneaky about it. Well, what do you think? Are you missing out on any of these tax deductions? Are there any common ones that you think I've missed? I'd love to hear your thoughts in the comments below. Thank you so much for spending this time with me today, and I hope you have a fantastic day, and I will see you in the next video.